Okay, everyone, quick presentation today on a little company called JDW. It's for those that don't know, it's a large UK pub chain. This is called JD Wetherspoons PLC, and this is more aimed at the UK investor. But today will be a very basic summary or lesson on how to understand a balance sheet, looking at things like net debt, trade, all types of payables, but with a particular interest today in non-current assets such as property, plant, equipment, and then looking later down the line at depreciation and what it means going forward. So let's get into it, and I'm going to try and break it down. So this is a very basic balance sheet of JDW. What we can see here is, just scrolling down a little bit, non-current assets. So for those that don't know, it's pretty basic. They're essentially long-term investments for which the full value will not be realized or crystallized within that accounting year. So generally the biggest non-current asset in your business will be property. And then it's things like, plant, equipment, this kind of thing. And the property is obviously always going to be split into freehold or leasehold. So it'll either be one of those two. And for Wetherspoons, they have a mixture of two. Now, I've managed to obtain some of the figures for the total amount of property that they own in terms of not just equity, but the leasehold and freehold value. Obviously, with this being a UK pub chain, it's really important to understand that they're not just a business in the food and beverage sector. They are also looking at, I'm also paying attention to perhaps where they could be bleeding cash. So generally, a company like this, they will own a certain amount of their, pubs outright, and then some of them will be leasehold. So I'm going to break that down now in the next slide and talk about it. You'll see here in the latest balance sheet that totaled of summer last year, which is in their accounting period, you can see that we are slightly out of date, so I'm going to bring up the current figures now and talk to you about them. So this is a slide for non-current assets, and what I've done is I've tried to break it down into very simple bite-sized chunks of information. So the first thing to know about Wetherspoons is that they have 872 pubs across the United Kingdom. 64% of those 872 are freehold, and 35% are leasehold. So you've got 560 that are freehold and 312 that are leasehold. As of January of this year, the net book value of all the property, plant and equipment is approximately 1.5 billion sterling. And out of that, 1.1 billion is made up of freehold and long leasehold property. So they've got about 1.1 billion in property and another 400 or so million in plant and equipment. Now, what's interesting with this company is that obviously since we had the second national lockdown that started at the beginning of the year, this company has agreed deferral of rents from a lot of their landlords on 90% of the properties since the first lockdown. Now, the first lockdown in the UK was March of last year. The second lockdown, as I said, was at the start of this year. And what's interesting is that the fact that they've deferred 90% of their rents, obviously on leasehold properties. So leasehold, they've got 312. They've deferred about 280 of those. So they're only paying rent on, 32 or something like that, as an example. The other 280 they've deferred. And they started deferring the rent in March of last year. To date, their total rent deferral totals around 18 million sterling. So that timeline obviously is 10 months from March 20 to January 21 is about 10 months. So currently they're deferring about 1.8 million a month in deferred rent. Given that we know they own around 560 freehold properties, the freehold property makes up 64% of that 1.1 billion, which is their total property. So they've got about 740 million in total freehold value. We don't know whether that's equity. We'll look at that in a moment. And And what we can actually work out from this is that if they're deferring 1.8 million a month, which is around 18 million in the last 10 months or so, so add another sort of 3.6 million for the year, and it's sort of 21.5 million over a 12-month period. It's costing them approximately 0.26% or around 3% year on year of the value of their total freehold. 560 properties, total value 740 million, 64% of the 1.1 billion, and it's costing them 3% of that 740 million in which is about 21 million in deferred rents. Now that will roll over. The problem is when you start deferring large non-current assets on a balance sheet, you need to be able to pick them back up quickly, otherwise things will snowball. And that's what we're seeing here. A pub chain that is paying 3%, and then you've got inflation, and then you've got maintenance, which we'll look at in a minute, is actually quite steep. Because if you think about it, once we add maintenance in and inflation, they're paying 6-7%. Now, are property prices going to go up 6 or 7% a year for these commercial properties? I don't think so in the current climate. So actually they're burning money. And of course it's a non-current asset, so it's not crystallised. They're not going to be selling, these pub locations in the next financial year. But later down the line, Wetherspoons are banking on prices rebounding, and so on. So it's something to keep in mind. When I look at large chains of restaurants, pubs, whatever it may be, I always go first to the non-current assets, and I split the total locations, number of locations, straight down the middle, whether it's freehold or leasehold. I work out the total value, and then if they're deferring rents, I work out what that value is as a total against their total freehold. And you can work out usually 3-4%, and then you've got maintenance, and you've got inflation. It can add up. So if the property prices aren't going up more than 7%, in the near term, they're deferring 7% a year on paper. And they've got to pay that back, probably with interest, to the commercial landlords at a later date. The tipping point potentially is repairs or ongoing maintenance on these properties. So what I've worked out is currently the weekly run rate is around 250,000 since the national closure. Now before this it was closer to 4 million a week in maintenance. Okay, now they've got it down to about 1 million a month. And what we can actually see here is that the company outlook. The company has come out recently and said that they assume that the pubs will remain closed until the end of March of this year. Total cash burns will be around 4.1 million a week. Now, obviously, at the moment, they're deferring 1.8 million in rent. That isn't going towards cash burns. Cash burns is what they have to pay. It's not. You can't defer cash burn. So we need to also add on deferrals on top of cash burns. Once we add that on, we can get the actual figure for what it's costing them, because deferrals, as I say, have to be paid back at a later date, whether it's next year or next week. It has to be paid back. You can't write off deferrals, unfortunately. So it'll be very interesting to look at companies like this. Obviously, this is a very large UK pub chain. The smaller pubs that we've been looking at work are being culled. So there's potential for Wetherspoons to pick up a larger market share years down the line. In the near term, we assess whether a company is burning cash, and this is the best point to look at, and it's always non-current assets, and usually it's property, then plant and equipment. Not so much equipment in this case because it's needed to run the business, but property, and looking at how much they're deferring. And remember, companies only defer during crisis periods, whether it's hardship with funds, whether it's a pandemic, whatever it is, there is a reason for this deferral, and it can't be written off. So it'll be very interesting to see that when we calculate the full earnings, you can see the last statement there, less any reinvestment in existing properties, and we will get a figure that will then appear on the balance sheet. So if you can't do this, you will struggle. So I hope this sort of sums up what we look at, um, and some of the basic figures for working out, as I say, non-current assets on a balance sheet.